Thank you so much, Chamberlain. Good morning. Welcome to Business Morning on Sunrise Daily. Yes, it's going to be about 30 minutes of business conversation. Of course, it's not the impact of the insecurity in the country is also affecting businesses, obviously. And so thank God that Sunrise Daily is handling that. But now let's do business. We start from the global space where Chicago wheat futures were largely flat on Friday, with the market on track for a third weekly decline on pressure from Chinese buyers canceling shipments amid plentiful global supplies. Let's look at the number. We can tell you that corn firmed while soybeans slid. So we see wheat unchanged at $5.32 for a quarter of a bushel. Soybeans slid 0.1% at $11.94, getting close to $12 there. But it's difficult to see soybeans at $12. You know, it's mostly around $11. That's for half a bushel. And corn on the CBOT platform is up 0.3% at $4.35 for a bushel. For the week, wheat is down 1%, having lost 6.5%. And in 3 weeks, corn also down 1.1%, while soybeans have added nearly 1% for the week. Chinese wheat importers have cancelled or postponed about 1 million metric tons of Australian wheat cargoes as growing world stockpiles drag prices lower. This news came after the U.S. government reported cancellation of more than 500,000 metric tons. We've been talking of cancellation for about 3 weeks now of U.S. wheat exports last week to China. Cancellation of shipments by China, which is the world's #1 wheat buyer, are heightening concerns among exporters over rising world surplus. We go over now to the oil space. Prices edged low on Friday, but were on track to gain nearly 4% for the week, and that's boosted by the International Energy Agency revising its 2024 oil demand forecast higher. An unexpected decline in U.S. stocks. Let's look at the prices now. It's gone from 83 to 85 dollars with 17 cents for Brent, even though it tapered a bit here, 0.3%. WTI also is up. Yesterday we were talking about $79, remember? But this morning it's $81.04 a barrel, but it's also dropped, tapered 0.3%. The gains this week have come despite the U.S. dollar strengthening at its fastest pace in 8 weeks. A stronger dollar makes crude more expensive for users of other currencies. Also supporting oil prices this week were Ukrainian strikes on Russian oil refineries. You know, 2 of those facilities have been hit now in Russia. Caused the fire at the Rosneft, which is the biggest refinery, one of the most serious attacks against Russia's energy sector in recent months. I'm talking about that report from the International Energy Agency, the IEA. It has raised its outlook for global oil demand for the year in its monthly oil market published yesterday, Thursday. The Paris-based agency says it expects the level to grow by 110,000 barrels per day to 1.3 million barrels per day by the end of 2024. However, the IEA notes that the weaker economic outlook, efficiency improvements, and electric vehicle sales might slow down the growth. Meanwhile, the agency says the oil market might be in a slight deficit rather than a surplus this year if output cuts by OPEC and its allies are maintained throughout the year. Well, talking about the oil sector now in Nigeria, the Senate has dismissed media reports claiming that it will expose all frauds associated with the contracts and management of the turnaround maintenance of the nation's refineries. This is in reaction to a news report last week, a claim that Senate, through its ad hoc committee on investigation of turnaround maintenance in the nation's refineries, has vowed to expose all frauds associated with the contract and management of the process. The chairman of the ad hoc committee, Senator Ifeanyi Ubah, said he was quoted out of context. Now, responding, the GCEO of NNPC, Mr. Kyari, said, drew the attention of the ad hoc committee to the news report and assured Nigerians that the delivery date of the Port Harcourt and other refineries remains sacrosanct. He assures that after the mechanical completion of the Port Harcourt refinery in December, there is now to 450,000 barrels of crude oil already in stock in it, and refinery is currently undergoing regulatory compliance tests before the restream, and assures that in the next 2 weeks, This is what the group CEO of the NNPC is saying, that the Port Harcourt refinery will start operations. All of this contained in a statement signed by the Chief Corporate Communications Officer of NNPC, Mr. Olufemi Shoneye. So we're counting down 2 weeks. We're expectant. I know we've been counting down for Dangote refinery also. Now we're counting down. This is the government's own. So if in 2 weeks the Port Harcourt refinery starts operations, and then we know when the products get into town, we can follow up, to see how that will affect everything around supply and prices. And of course, the issue of subsidy will always come up around that. Now, I'm still staying in that industry. President Bola Tinubu has executed policy directives to improve the investment climate and position Nigeria, to make Nigeria as the preferred investment destination for the oil and gas sector on the continent. The president has initiated the amendments of primary legislation to introduce fiscal incentives for oil and gas projects, reduce contracting costs and timelines, and promote cost effectiveness in the local content requirement. This, of course, was revealed by the presidential spokesperson, Mr. Angilali. And the president has also ordered the streamlining of contracting process to compress the contracting cycle to 6 months, application of local content requirements without hindering investment or the cost of competitiveness. Now, let's talk about this and a whole lot more with an individual who is active in that sector. He's the Chief Executive Officer and Managing Director of First Exploration and Petroleum Development Company, Mr. Ademola Adeyemi Bero. Mr. Ademola Adeyemi Bero, good morning. Thank you so much for coming on the program this morning. So I'm sure, of course, you know about this. This is your sector, the president's order. Tell us your thoughts about it, because sometimes when we have some of this, they sound exciting, but when we look closer, we see that, for instance, when it comes to the EL, the Expatriate Employment Levy, we already have some laws and policies that take care of that. And so even though we get excited, the excitement shouldn't be in the pronouncements and the directive. It should actually be in the implementation. Is this one of those, you see?
Well, thank you. First, let me thank you for inviting me to channels this morning. I think what you see is continuous improvement. The PIA was enacted, put in place. The law came in 2021. That PIA was not the only thing that was required. It required other enablers. And what you see in what the president has done is building on that platform of that law and putting all the enablers in place. You've talked about fiscal incentives, which is really making the project we want to do bankable. So at the end of the day, they're major investments and we want to get returns from them. It's improving the contracting cycle, like you've said, and just strengthening Nigeria's ability to be a preferred destination for investments. So I see it as continuous improvement. There's more to do, but it's putting wheels behind that act that was passed in 2021.
So we hear contracting process here. Then we think of the issue of corruption, the bureaucracy, the paperwork, a lot of the process you still need to deal with humans, and that gives room for a lot of compromise. Have we started that process, perhaps of putting technology or ways to really, outside the paper, improve the process, the contracting process?
Yeah. I think what you see is, this is an industry that's major investment, high risk. And hence the need for you to make sure the contracting process is fair, it's open. And that's why we have the contracting process we've had in place for decades. But I think what we see is that has made us not competitive compared to other countries. So cycle time between a contract that you want to issue going 2-3 years, it will make contractors disinterested in performing and coming to work in Nigeria. So yes, you may say that the corruption and all of that, but we needed a clear process. What the government has done and what the president has done is they actually had a discussion with stakeholders. So they called the oil companies in and said, what do you need to do to make you accelerate your investments, accelerate your activities? They also spoke to the regulator, they spoke to NNPC, and then what they've come up with is practical things that puts into motion things we need to do. So shorter contractor cycle, ability to have higher thresholds where you don't need to go through a long contracting process to have your contracts in place. So I see those as enablers For us as a company, it allows us to almost put 60% of our projects without going through a long contracting cycle. And that just allows us to do things a lot quicker.
So you're good with the 6 months limits?
I think 6 months is a good one. If it's 1 month, it's even better. I think what they've said is...
Is it possible for it to be 1 month?
It is possible, and I think it's been done. I think what you're hearing government saying is 6 months should be the limit. So it can be done in weeks. It could be done in a few months. I think the challenge for all of us is to make sure that we're doing it faster. And what it does is it gives contractors who are bidding for this confidence that when they submit a bid, they can actually get to closure on an award in a shorter cycle time.
So we've had multinationals leave the same industry. So sometimes I ask, is it the N in us that pushes the local producers and corporates like you to go to a place where international companies, well, in quotes, have failed and are running away from?
Okay. So this is one, if there's one message I need to bring to this platform, to the audience, is this. The Nigerian oil and gas industry is the largest resource base in Africa. It's also a mature one. So it's not a young one which is in exploration phase. It's actually in development and in production. Typically, the international oil companies, what I call the big five, the big six, they like big projects, huge technology, long gestation, so major gas and deep water and all of that. So what you're seeing is that their migration out of Nigeria is actually not an exit. They're just going to their own turf. So you see them more in deep water. But let me share two things. In the deep water of the UK continental shelf, you've seen the exit of the majors and replacement of what I call the independents, the mid-sized independents in the UK. Same thing happened in America 30, 40 years ago. It happened in the UK 10, 20 years ago. So what is happening in Nigeria is not new. I think the good thing is there are indigenous companies who are able to step up, have the capacity and the capability to take over in the domains that the IOCs are exiting from. And that's what you've seen over the last 10 to 12 years.
But in spite of this, we still need foreign investment.
Absolutely.
So how do we balance that now?
So first of all, these three policy directives enable that. What does an investor want? He wants a good return on his money. So the fiscal incentives have actually improved the return on investment for this project. If I take some of the projects we have in First TMP, we're seeing a 20-30% increase because of these incentives. And it's because government listened. When Mrs. Verheiden was talking to all the companies, she was asking us, what will make you invest? So first of all is the fiscal incentive. Second one is just the contracting cycle. If somebody is tendering to do work for you, and they're going to raise money in the banks to come and do that work, they want the answer in 3, 4, 5, 6 months. They don't want it in 2 years. In 2 years' time, that investment would have left. And let me say this, we need to get competitive. We're not competitive compared to our peers, not just globally, but also in Africa. So this is about making sure that we have the resource base here, so let's get competitive to get the investments here. People say over the last 10 years, of all the investments that came to the oil and gas space in Africa, Nigeria only attracted 4%. And we're probably the largest resource holding. So they need to change that. And I think these initiatives allow that to happen, just like the PIA gave clarity. But there's more to do. Let's be clear. There's more to do there.
And the world is harping on energy transition to renewables.
Yes.
Where do you fit in?
Well, look, for First TMP, and also let me say Nigeria, we have to be part of that transition. There's a lot of gas in Nigeria. We say we have 204 TCF. I think if you listen to the message from NNPC, if you listen to the message from the indigenous companies, the transition is going to be gas. Gas will be that transition fuel. But we must do two things. First of all, we must clean up our act. We must stop emitting in the environment. So what does that mean? Stop flaring, reduce emissions in our fields. And that's a program that you heard Total announce that they've gone flares out. And a lot of companies are going to do that. First TMP will be flares out by the middle of the Q2 of this year. So first of all, let's clean up our act. I think the second one is let's now make gas that revenue and that transition fuel, not just for Nigeria, but for Africa as a whole. So, and what that means is the oil we have, we still need to develop that oil, accelerate the development of the oil to generate revenue for Nigeria. So when you look at the mix, there's things for us to do. And I think the focus that you see NNPC giving us, the drive that you're seeing from government, the alignment with the global dynamics, I think we're on that path to play in that role as well.
Well, interesting you say we're on that path, and you say we have to clean up our acts. And we keep hearing the world say Nigeria is more of a gas country than even oil. But the infrastructure seems to be the missing gap.
Yeah.
And that infrastructure is very capital intensive. In the midst of our reality today, now the government has said they're going to, the Eurobond market, that's more borrowing, obviously more interest that will be paid compared to the domestic one. How do you see us starting off this need for gas infrastructure?
So first thing first is, I believe capital chases anything that gives good returns. So what we have to do is make sure that projects are bankable and they give good returns. Like I just said, these three initiatives given by government, from the contracting cycle that reduce cost, from the fiscal incentives and the tax credits and the allowances they've given, we are seeing roughly a 20 to 30% increase in returns, and that makes the project more bankable, more doable. And it will put that project in the financial services entities who are looking at it at a higher threshold for approval. So first of all, what government has done is the things they need to do. Make these projects, make this environment attractive to investments. So that's the first thing you have to do. I think the second thing is we have to get going. The IOCs are going to their own domain. I think my own prediction, and I've always said this, for I've been in, is that Nigerian indigenous companies and NNPC, with the support of our regulators, will drive the gas game for Nigeria. The internationals will look at it for export. We need that because we need the revenue from export. But the gas that we do domestic in Africa has to be done by the indigenous companies. And I would say we are ready for that. If you take First TMP, our plans over the next 5 years is to get almost half a BCF a day of gas into the domestic and the regional space. But to do that, we need to make sure that we get the fiscal incentives, which these directives have put in place.
So could you give us some of those incentives, for real? So
okay, so let's take one around the contracting cycle. Threshold has gone to $10,000. Before it was $10 million. Before it was $500,000, it was $2 million. We've gone to $10 million, which means that we can move faster in our contracting. We don't have to go through a long contracting cycle that involves our partners. That's a big one. Local content. If you look at the local content, it was a good plan and good for Nigeria. It enabled companies like First TMP and service companies to actually emerge. But then we need technology. And sometimes all that technology does not sit in Nigeria. So we must be able to actually attract external technology, new companies to come into Nigeria to compete, and don't let our local content laws become a hurdle for them. So when you look at all of those things, they are making all of these things possible. And then when you say fiscals, there's a 25% tax incentive that's been put in place. Though all of those things, when you take the combined effect of those fiscal incentives, of the tax incentives and all of that, I'm saying in our projects, we can already see a 20% uplift. And what that just does is it gives momentum to raising finance, and also it makes it bankable for us to run faster after all of these things. So there's a lot in there. There's ones you can quantify. But at the end of the day, what I always say is can you actually summarize what that means for returns? Because, it's a business that actually has to generate returns. And when I see a 20% increase in returns for what has been given, it's a big plus for us. Yeah,
big motivation. So I'll just ask you this, because you are in the industry.
Absolutely.
Because when we heard that Dangote Refinery will be importing crude from the United States, we know that Brent, from what I've learned, having conversation with experts, is easier to refine for our use and all of that, even though WTI from the US is cheaper. And then Nigeria is supposed to be known as a crude-owned country, and yet one of our own has to import. It's kind of heartbreaking, don't you think? Or is it just a business decision? So we should get our emotions out of it.
First of all, what I always say is that Alhaji Aliko Dangote and the Dangote Group took a big, major step, building probably the largest refinery size in the world and putting it in Nigeria. So big plus. That's big kudos to that entity and to that company. When you look at refineries around the world, even in countries that have their own crude oil, just for the blend in their refinery, and I'm just talking generally now, they import different sources of crude from different places. So whether they're importing from Nigeria or they're importing from the US, I don't think it's an issue of price or quality alone. Now, the objective we should all have is to make sure that we can feed the Dangote refinery with oil in Nigeria. The PIA already has some things around there. We will get there. And I think the dynamics that you will see over the next year is all of that will ameliorate. But I would not say that he would not import crude oil from other places, because you tend to blend to get what you require for your products coming out of those refineries. So I don't think it's a bad thing. I think we should get out of the emotion. The important thing is that refinery is here. It's going to serve the Nigerian market. First. Before? And it will also serve the regional market and international. So I'm actually quite comfortable, because I've seen refineries in countries that have oil and gas where they still import different mixes for their own blends. I don't know particularly what their assay requirements are, but I don't see this as a big issue.
So let's get our emotions out.
Absolutely.
Let's move on and look at the facts.
Absolutely.
Okay,
the important bit for him is to deliver products for us.
Exactly.
The diesel, the kerosene, and the other elements.
The supply pressure that we
ease the supply pressure, and hopefully, lower the cost of that product at the end of the day.
So finally now, yes. In 2 weeks, Mr. Buharis is telling us to expect that the Port Harcourt refinery, Nigerians, we hold our breath when we hear some of these promises. What do you see? Is it going to work? Does it look like it will work in 2 weeks?
Well, look, what I always say is this: running the oil and gas business is a big challenge. And I must really give Mr. Melik Kolokeri a lot of kudos. The dynamic nature of all the things they do. What I'll say is this: project execution and project delivery is something that he understands and he knows. So we should take him for the words and what he said. I am confident. Don't forget, they had a mechanical completion gate some months back. And clearly, he's now telling us it will happen at this stage. So I'm confident that we should listen to him, but we should always continue to support them, because project delivery in Nigeria is not easy. I mean, I always say we're going to deliver a project by this day. Sometimes it slips. I know Nigerians are interested. They're
very interested.
But I'm confident they'll deliver this.
And also because the NNPCL told us they were going to be on the NGX. That's over a year ago, and we haven't seen them. So we're like, oh, what's going on?
There's a lot on their plate. There's a lot on their plate, and we should give them the time to execute all of this. The good thing is they have a very clear game plan they're working towards, and we should just give them that time to do it.
We need the timelines.
And I think they're telling us the timelines. He's giving us one for the next 2 weeks.
All right. Yeah. All right. Thank you so much for your time, Mr. Ademola Adeyemi, the Chief Executive Officer, Managing Director of First Exploration and Petroleum Development Company Limited. Thank you.
Thank you. Thanks very much.
Yeah. All right, now let's head to the market in just a couple of minutes, and we look at the NGX. We see that there was profit yesterday, but it was a slim profit compared to other days. But it's still a green market. There you have it, 0.05% is what we saw at the close of trade at the NGX. And then 58.83 trillion naira is the market cap after gaining 28 billion naira at the close of trade. Sectors, we see banking, consumer goods, and industrial goods were in the green, while insurance down. Oil and gas has not made up its mind. Perhaps they're waiting for the Port Harcourt refinery to see if it's going to start working in 2 weeks. But we have Abdulrasheed Momo now joining us. This is our market prophet. He looks at his crystal ball and the graphs and tell us where we are going to. Mr. Momo, good morning. Thank you so much for joining us this morning.
Good morning. How are you?
I'm fine. Hello? So, yes. Okay. So we saw a positive week last week. We saw another positive. We've gone back to 104,000, but the profit is slimming out. Are we heading back to the bear territory?
Well, I've always said the most surprising thing about the index was the 100,000 points. We've gotten above the 100,000 points. We are within the 104,000. resistance is 106,000. Yeah, market has been up for the past bull rallies for the past I think for the past 1 week plus the market has been going up. So corrections are expected. But I think for now this correction is a healthy one because I still see there's going to be another bull rally coming up. Yeah, I think when we start seeing the numbers coming, what has happened so far is in anticipation of numbers coming in, prices have gone up. But technically, what we are seeing now, it's a short-term wave 3 correction, wave 4 correction. So we are expecting a next wave of rally to the top side coming up soon. And I feel this time it's going to bring the 106,000 points, which has been the all-time high for the index. So people should be patient. There's a rally coming up.
So are you saying there will be a pullback before the 106,000 points, you see?
Definitely, yes. No, the 100,000 points have been achieved. You know, the last time we were within about 98,000 points.
Yeah.
And I said the index needed to be in 100,000 points. So now the index is above 100,000 points in 104,000 points. The resistance for the index is 106,000. That's the main target. The bulls needs to break out.
So do you think we will hit the 106, that's resistance of 106,000 before the pullback?
It's going to break it.
Before or after the pullback?
This pullback is healthy now. Like the market is down now, right? People are still taking profit as we speak. The market is down by 102.
Wow.
0.6 points as we speak now. Yeah, most of the indexes are in red. But the good thing is that definitely people are going to buy in strength. I'm seeing a bull setup warming up. So as the prices are dropping, I feel people are going to buy into those weaknesses. And I know there's still one more bull rally to go.
Okay, so
there's still one more rally to go, so people should watch out.
Okay, so help us to understand what's going on with the oil and gas.
There's one more rally to go.
Okay, all right. So what's going on with the oil and gas counter? We know that the first time the news came out, we had those who will participate or get products from the Dangote refinery. We saw that counter rally, but after that, it's been kind of quiet, either negative or unchanged. What's going on there, and what can move that counter?
Well, definitely, when things like this happen, prices always tend to move to the top side. No matter how market is, there's always bound to be correction at the end of the day. That's why, like, Seplat was a very strong stock then. To speak, Seplat is on full. One that used to be a very aggressive stock within that period we are not seeing much rallies in those stocks now. But as I always tell people, we work within support and resistance level to actually give us the ideas which areas what will be our entry point and exit point. For now, let's say Owando is trending within 11 naira to about 11.65. It's been on the downside, but what we are seeing now is we are seeing more systematic buying into weakness. And as I said, there's still one more rally to go. We are still going to see a bull rally in the market. And I think it will be likely going to be from the banking sector.
As usual, Mr. Abdulrasheed Momo, thank you so much for sharing your thoughts and observations with us this morning.
Thank you very much.
All right, so we'll have more on the markets during Business Incorporated. That's 1 p.m. So you want to join us then to get those details as well as other conversations around the world of business. For now, it's back to the Sunrise Daily team.